Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi Singh. Welcome to another edition of our weekly podcast, The Week That Was. Indian assets had one of their best weeks so far this year, supported by strong domestic buying, moderating foreign investor outflows, and a sharp reversal in crude oil prices. Indian equities traded with a positive momentum for much of the past week, posting one of the best weekly gains since May 2020. The Nifty index rose 3% over the past week and outperformed most regional peers. Broader markets outperformed Nifty for the second week, with the Nifty Midcap Index up 4% and the Small Cap Index up 3% over the past week. Among sectors, all sectors ended the week in green, with capital goods, FMCG, and realty among the best performing sectors with gains of over 5% each. Indian fixed income market had a decent week, with bond yields remaining stable across the curve, supported by RBI's announcement on changes to FPI investment limits in the Indian debt market, a sharp reversal in crude oil, even as US Treasury yields rose sharply over the past week. For the week, the 10-year Indian government bond yield ended flat to close at 7.42%, while the 3-year and 5-year Indian government bond yields fell 3 basis points each. During the week, RBI announced a spate of measures to support the INR and alleviate dollar tightness in the domestic market. These measures remain in force for a notified period and include the following. First, RBI allowed banks to offer competitive rates on fresh NRE and FCNRP deposits, which are exempted from cash reserve ratio and statutory liquidity ratio requirements. Second, FPI investment limits in Indian debt markets were further rationalized. And third, lending universe were broadened for Category 1 banks undertaking overseas foreign currency borrowing, and external commercial borrowing limits under the automatic route were also further enhanced. However, the INR closed the week at 79.25 per dollar, down 0.3% over the past week. We had an important macro data reported during the week. India's services PMI rose to 59.2 in June 2022 from 58.9 last month, pointing to the strongest expansion in the sector since April 2011, buoyed by a substantial pickup in new business growth as demand strengthened while employment improved sequentially. However, cost inflation continued to rise and sentiments remained muted amid elevated inflationary pressures. Over the coming week, investors are likely to focus on the start of the earnings season and release of domestic consumer price inflation data. Consensus expects inflation to remain above the upper band of RBI's tolerance limit and closer to the last month's reading of 7%. At this point, I'll take a pause and thank you as always for listening. If you find this podcast useful, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.